Have you ever looked at your camper van just sitting there on the driveway and thought, that could be making me some money? Well, it's a really tempting idea, right? Especially with staycations being so popular. But that one simple thought actually opens up a whole world of tax rules. So today, with some expert guidance from the team at My Tax Accountant, we're going to break down exactly what you need to know. Okay, so let's get right into it. It just makes perfect sense, doesn't it? Your vehicle might only get used for a few weeks a year, but for the rest of that time, it could be a fantastic little earner. We're talking about a genuine side income here that could help pay for its own upkeep or maybe even fund your next holiday.
But, and this is a big but, here's the catch. The second you earn that first pound, you've stepped into the world of tax. And if you get it wrong, it can turn a brilliant side hustle into a massive headache with HMRC. That's the UK's tax authority, of course. The whole point is to make money, not to create a bunch of problems for yourself down the line.
So, to keep you on the straight and narrow, here's our roadmap for today. We're going to cover the tax-free allowance, what to do when you start earning more, the point where it might become a full-blown business, and, crucially, some common traps to avoid. And we'll be using the 2025/26 tax year figures to keep everything up to date.
All right, first things first. Before you even think about listing your vehicle online, we need to get a handle on how the government actually sees the money you're about to make. This is the foundation. You really can't skip this bit.
Basically, any money you earn this way has a name. It's called miscellaneous income. And it really doesn't matter if it's just a casual arrangement with a friend or if you're using a big platform like Camplify. If cash changes hands for the rental, HMRC sees it as taxable income. Simple as that.
But hold on, it's not all about paying tax from the word go. There's actually some really good news right at the beginning, especially for those of you who are just, dipping your toes in the water to see if this is even for you.
Okay, here it is. This is the first and probably the most important number you need to remember. £1,000. This isn't just some random figure, it's your magic threshold. Think of it as your tax-free starting line for all this kind of income.
This is all thanks to something called the Trading and Miscellaneous Income Allowance. It's specifically designed for these kinds of small-scale ventures. So, if your total earnings from renting, and that's your gross income before you take off any expenses, is £1,000 or less in a tax year, you're in the clear. No tax to pay, and you don't even have to declare it. How great is that?
So, what happens when your rentals really take off and you sail right past that £1,000 mark? Well, first of all, congratulations, that's awesome. But now you have to declare that income, and this brings you to a really important choice about how your tax gets calculated.
And this is the choice right here. You can either just deduct that flat £1,000 trading allowance from your total income, or you can meticulously add up and deduct all your actual running costs. We're talking insurance, servicing, cleaning, all of it. Now, the key thing is you can't do both. You've got to pick the one that leaves you with less tax to pay.
Let's just look at this example to make it super clear. Let's say you earn £2,000 in a year. If you use the trading allowance, you subtract £1,000, which leaves £1,000 of taxable income. At the basic 20% rate, you'd owe £200 in tax. Okay, but what if your actual expenses were only £500? Well, if you claimed those, you'd subtract £500 from your £2,000 income, leaving £1,500 to be taxed. That's £300 in tax. So in this case, the flat allowance is the clear winner, saving you £100.
Let's make this even more real with Aisha's story. She earned £3,000 renting out her camper van last summer. Her actual running costs added up to £800. Now, if she claimed those expenses, her taxable income would be £2,200. But by using the £1,000 allowance instead, her taxable income dropped to just £2,000. That small choice saved her $40 in tax, and let's be honest, a whole lot of paperwork.
Now, something really important to remember is that this rental profit gets added right on top of your other income, like the salary from your main job. Your total earnings for the year are what determine which of these tax bands you fall into. For most people just starting out, that extra profit will probably be taxed at the 20% basic rate.
So far, we've mostly been talking about casual renting. But there is a point where your activity can become so regular, so significant, that in HMRC's eyes, you've actually crossed the line from a hobby into being properly self-employed.
The trick is recognizing when this happens. Ask yourself, are you renting it out almost every single weekend in the summer? Are you advertising professionally? Do you rely on that money to pay your bills? If the answer is yes, then you're likely considered self-employed. And that means you have to register with HMRC. And it brings extra responsibilities, like paying national insurance.
And if you are self-employed, you'll come across these two types of national insurance. The easiest way to think about it is that Class 2 is like a small flat rate contribution you pay once your profits hit a certain level. Class 4 is different. It's a percentage of your profits. You'll calculate and pay both of these through your annual self-assessment tax return. Right. For those of you who get really successful with this, maybe you're thinking about adding a second or even a third vehicle to your little rental fleet, well, this next number is a huge one. It's a threshold you absolutely cannot ignore.
This is the VAT threshold. If your total turnover, and notice I said turnover, not profit, that's all the money coming in, goes over £90,000 in any rolling 12-month period, you are legally required to register for VAT. This means adding 20% to your prices, which you then have to collect and pay over to HMRC. It's a real game changer.
Okay, let's talk about how to avoid the most common mistakes people make. Honestly, staying on HMRC's good side isn't about being some kind of tax genius. It's mostly just about having good habits right from the very start.
And here's a brilliant pro tip for you. Seriously, do this. Before you even get your first booking, open a separate bank account just for your rental activity. Funneling all your income and expenses into one dedicated place makes tracking everything unbelievably simple, and it just proves to HMRC that you're organized and transparent.
Now, if there's a little voice in the back of your head thinking, maybe I could just keep this rental income quiet, you really need to reconsider. Especially from 2025 onwards, because HMRC has a powerful new tool in its arsenal.
That's right. New data sharing rules mean the digital platforms you're using are now legally required to report your earnings directly to the taxman. They know exactly how much you're making, from who, and when. So let's be clear, there is simply no hiding it anymore.
Another huge trap is overclaiming expenses. You can only claim for the business part of your costs. So, for example, if your camper van is rented out for 100 days a year, but you use it for personal trips for 50 days, you can only claim for 2/3 of your annual costs. The process is simple. Log all your costs, track your business versus personal use, calculate that business use percentage, and then claim only that share of your expenses. Be fair, be accurate.
Wow, we've covered a huge amount of ground, haven't we? From your very first tax-free pound all the way up to VAT registration. It's pretty clear that while this is a fantastic way to make extra money, the tax side of things does require some real attention to detail.
So let's just quickly recap the absolute essentials. Number 1, you can earn up to $1,000 tax-free. 2, above that, you must declare it and choose wisely between that flat allowance or claiming your actual expenses. And 3, whatever you do, from day 1, keep excellent records.
At the end of the day, getting your tax right isn't just about avoiding penalties. It's about giving yourself the peace of mind to grow this new income stream with confidence, knowing you're paying what you owe, but not a single penny more than you have to.
And of course, you don't have to try and figure all of this out by yourself. If you'd like advice that's tailored specifically to your situation, you can always reach out to the professionals. The team at My Tax Account are experts in this field. You can reach them via WhatsApp or phone on 07854255375, or you can email them at info@mytaxaccountant.co.uk. And for more helpful guides just like this one, make sure to subscribe to their YouTube channel.